Illinois Clarence, good morning to you. Good morning, Bethany. Mahfouz. Those of you guys logging on, go ahead and type in where you're logging in from, where you're listening to me from. Got a good couple of articles to go over this morning for early morning crypto talk. Mahfouz for Laurel, Maryland. As a disclaimer, I'm not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share suggestion, and you make an adult decision on which direction you want to go on to. There's 4 rules I live by in the crypto space. Rule number 1, education is key. Education is everything. Rule number 2, never invest money you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. Rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make it happen? Make a decision, take action, and stay focused. Do not get distracted. There are so many things out there that can distract you in this space. You have limited resources. Now, following these rules is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. Good morning to Clarence, Atlanta, Georgia. Tony Pinkston. All right, so let's cover a couple of articles that we can go over now. Good morning, Mr. Lofties. Let me turn on screen share. All right, in just a second, you should be able to see my screen. Today is a lovely Wednesday. Now I'm going to be doing as well, maybe in a couple of hours. YouTube and both Facebook was messing with me. I couldn't do my Facebook or my live. I was talking about, the year is not over yet. It's not too late. So I will do that in a couple of hours to finish what I was talking about yesterday. A lot of people said, I left them hanging. What's going on? Nicholas from Sweden. Darnell from the OKC. Okay, first off, we're going to talk about cryptocurrency isn't reinventing money. It's reinventing value. I like that. That's something I'm going to have to remember. It is not reinventing money. Because that's what people think. Oh, it's going to take over. No. That's not the point. It's reinventing value. Throughout human history, we have placed value on all kinds of things. Rice, calories, and I don't mean to sound kind of silly or stupid, but what in the world is calories? Can somebody help me out? What is calories? Supreme Court Justice Stephen Breyer said the same thing, but anyways. I'll feel stupid when someone tells me what it is too. Even cigarettes in prisons. None of these things are money in the way we understand fiat currency, such as the bills and coins our governments supply to us. Fiat money only has value because one central authority decided that it will have such value and then built a system around it. If fiat currency only holds value because governments have told us it does, then what do we really value? If we unleashed ourselves from federal banks, how would the psychology behind money change? Money societies have strong emotional ties to physical money and the consumerism that drives its spending. For a whole generation, people were told to deposit their hard-earned cash in banks. In exchange for this favor, the banks reassured them that they'd be set for life because of the interest they'd earn. That was a lie. However, the interest rate has been barely hovering above zero for a long time, and coupled with inflation, people's purchasing power has actually been gradually eroding. Yeah, the only people making money with your money in the bank is the banks, not you. Having your money in a savings account, what's that doing for you? You're steadily losing money every year. And then there are those who can't even participate in this economy. According to the World Bank's Global Financial Inclusion database, only 47% of people in low and middle income countries have bank accounts. 47%. That's more than half the population does not have access to a bank account. Reasons cited for being unbanked from 2013. Not enough money. Distrust banks. Bank account fees. Privacy. Credit banking history. Other. Lack of needed bank services and bank inaccessibility. So the biggest one is not enough money to even open up a bank account. Furthermore, our current financial system functions on debt, and the majority of the new money is created by loaning others money we don't even have. In other words, we are trying to create unceasing economic growth via the use of inflationary currencies backed by nothing but debt. Most cryptocurrencies, on the other hand, are deflationary in nature. As time progresses, governments and central banks will develop a stronger foothold over their population, and their presence will grow in influence. In reaction, citizens will try to find ways to exchange value with each other without government intervention. I like that. Wealth disparity is on the rise, and the number of poor people is growing day by day. These people have been disadvantaged by the current system, and they therefore can't trust it. These people will not make enough money to trade with others wealthier than them, or be able to buy goods and services that are out of their economic power. They'll therefore look for other ways to exchange. This is where the concept of tokens comes in. Token economics is gaining popularity. Tokens are a representation of a particular asset or utility that usually resides on top of a blockchain. They are less complex than cryptocurrencies such as Bitcoin or Ethereum, because you only need to slightly modify an open source code instead of creating a blockchain from scratch. More importantly, tokens do not have to be thought of as currencies to possess an enormous amount of value. Any real-world asset, a painting, a house, a diamond, can be tokenized and traded with low transaction fees and in a very short amount of time. Programmable tokens may end up driving programmable economies where societies and companies can design their own tokens and place whatever exchange value they would like on them. That way, marketplace value is only captured by those who create value for the marketplace. In a way, we're returning to the past. The global financial system started with bartering, and we are now adopting a similar structure on a digitized platform. I remember when I was a kid, when I would go out with my grandpa, and I remember when he'd be, not necessarily stores, but like the swap meet, like the Compton swap meet. I don't know if they still have that anymore. But he was a wrangler. He never paid the price that was listed. He was always negotiating. And I thought I was fascinated. I'm like, so wait a minute. They're telling you the price is this, but you can actually buy it for something different? Or I remember one time he went somewhere and the people just gave him whatever he wanted. And I'm like, you don't have to pay for that? And he said, nah, he's coming by next week and I'm going to help him fix his engine. I was, what? You're going to work on his car and he's giving you stuff? Yeah. That's how the neighborhood was back then. Or in my grandparents' neighborhood, you know, my grandma used to grow her own garden. And so a lot of people in the neighborhood would trade stuff with each other. That's how stuff was done. Yeah, bring that down, or I'll come and fix your pipes in your house. And in return, you're going to fix something on my car. That's where this is going back to, the bartering system. It says these tokens, like the rice, calories, and cigarettes of the past. Okay, so nobody knows what calories is? Because I don't. What do they mean, calories? Rice, calories, and cigarettes of the past do not need to have value assigned by some centralized external entity. They can just be used in defined, specific, distinct forms of trade within a community of peers. Everything does not have to have a price tag on it to have value. There are many other skills, goods, and services we can provide that are of equal value to money, if not more. We need to give the word value a whole other set of meanings. Our relationship to money is broken. Token economics could fix it. I like that. Token economics. All right, let's go on to the next article here. Now, this actually is an old article, but I think it has meaning still because 2018 is not over yet, and it's really going to explode in 2019. Let me post that in here. So Bitcoin investment to be made by a third of millennials by 2018. And this article came out December 20th, 2017, right where Bitcoin was around its height. I think it was still at maybe $19,000 per coin or $18,000 per coin around that time. December 20th, 2017. Bitcoin has experienced a huge price rally in 2017, with a 1,600% price increase since the beginning of the year. It is no wonder that a study by the London Block Exchange, a digital currency exchange, has revealed that 1 in every 3 millennials will be invested in cryptocurrencies by the end of 2018. So far, 5% of millennials aged below 35 have invested in various cryptocurrencies, with another 11% looking to invest come next year, according to the study. The numbers reveal an increased uptake in digital currencies such as Bitcoin as a form of investment compared to traditional investments like property, shares, and bonds. The study further revealed that another 17% are contemplating investing in cryptocurrencies by end of next year. Exclusion from traditional investment methods, such as pensions and property, was cited as one of the reasons why more millennials are investing in cryptocurrencies. Let me stop right there. That point is important right there. Exclusion from traditional investment methods. Most people that have a 9-to-5 job, they think they're in the stock exchange simply because their company has a 401k option. And every quarter, they release to you a little report with graphs and charts, and they're all colored, saying, yeah, if you're a risky investor, we've got 40% in this bonds and stock. You've got 20% over here, 10% over there, and it looks all official. And you think you're making some real money, and you realize when you look at it more closely, you made about $40. Right? We'll match 50%. That's a scam. That's companies' way of getting away from having to create a pension fund for you. Yo, yeah, we'll give you 401k so you guys can invest in the stock market. That is a complete scam by the companies. But most people don't understand finances, so they go along, oh, yeah, I guess I'm saving for my retirement. Here's the facts, and this is from the United States government. 97% of all Americans will retire broke, depending on family, government, and friends by the age of 65. 97%. And what's the government's solution to this? Let's increase retirement age from 65 to 72. So now they want you working more hours or more years, because if you don't, you're going to be dependent on the government for assistance. They literally want to work you to death. Most people pass away 2 years after retirement. So if they extend that to 72, they know you'll probably pass away at 74. So they don't have to continue paying. Oh, they think like this. It's the average people who don't get it. Thank you, Bethany. Cowries is a marine gastropods. I'm going to look that up. So they were selling that back in the day, and that had value to it. But if you really want to invest and create wealth the traditional way, we're talking real estate. We're talking stocks, not 401k and not savings. The problem with that is there is a barrier of entry. There is exclusion. You need at least $250,000 to $1 million if you want to be serious in the stock market. You need to pay maybe $40,000 to $50,000 for an investment firm to be serious for them to manage your accounts. You got to buy some property first off. If you're in California, good luck with that. A shack's going to cost you $500,000. I just saw on the news the other day that said that now the majority of middle-class people in California cannot afford a home, meaning that the amount that you're spending on your home is far more than 30 and 40% of your income. That's crazy. But cryptocurrency, and this is what millennials are figuring out, there's no barrier of entry. There's no exclusion. All you need is a cell phone, internet access, and $5 to your name. Over a year ago, all I did was took $30 and I flipped that $30 into six figures in 4 months. It doesn't matter how much money you start with. The key was the education. That's why we created KGX, to teach you everything you need to know about crypto so that you can be just a little bit dangerous in this space. You'll be able to navigate and move around. You'll be able to spot scams and schemes. You'll be able to spot things that you know are not going to last a year, but you can probably make a whole lot of money in 6 months. That's okay. Not everything is going to be long-term, but you can make some money on it if you know what you're doing. It doesn't matter what race you were born in, what religion, sex, creed, what country, what language you speak, the color of your skin, your gender, none of that matters. Cryptocurrency is the ultimate level playing field. The only thing that separates you is going to be that space between your ears. Education. And how you implement it. That's the only thing that's going to separate you from somebody else in this space. In an interview with The Independent, Benjamin Dies, founder and chief executive officer of LBX, said, "This study underlines a gulf between the younger generation's view of money and that of their parents and grandparents who had assets perform so well for them in pensions or property. Millennials clearly feel left behind by the old system and are looking at cryptocurrencies as a new dawn." That's correct. A new system is being generated. That old system, oh yeah, stocks and bonds and pensions and property, kiss that goodbye. It is no longer viable. It's barely viable for the baby boomers. It is definitely not there for Generation X, and millennials don't even have a chance. So cryptocurrencies is the new dawn age. The study by LBX projects that by the end of 2018, investments in shares, property, precious metals, and bonds will be at 12%, 18%, 19%, and 20% respectively. Besides, of those aged 35 and below, 24% of them regret not having bought a cryptocurrency much earlier. Despite the soaring price of Bitcoin in the past year, I agree. The research carried out by LBX that interviewed 2,000 Britons across a diverse demographic further reveals that the older generation aged 55 and above were less bothered by Bitcoin and would not be investing in any cryptocurrency for that matter. You see that? Aged 55 and above. So who are the majority of the lawmakers right now in the United States? Most of them are all over 55 years old. They don't understand this. They're not going to be friendly to it. They want to maintain the status quo. So there's no need to get upset by it. Just know who you're dealing with. Cryptocurrency expert and research fellow at the University of Cambridge, Garrick Howman, stated that while most financial institutions such as banks have found it difficult to identify with millennials, Digital currencies have outdone them in a short time span due to their acceptance by millennials. Millennials began their income generating years during the fallout from the 2008 financial crisis, and many do not completely trust traditional financial services, firms, or the system in which they operate. That's true. Generation X as well. We don't trust it. While there has been a significant price rally in Bitcoin this year, more than $17,000. Wow, I remember those days. The digital currency has also shown considerable volatility. This has raised questions about whether Bitcoin is a bubble. Additionally, countless economists believe that Bitcoin is a serious gamble and that its value would crash sooner than later. Senior analyst at Hargreaves Lansdowne, Laith Khalaf, mentioned the need for investors to understand Bitcoin and understand its value before investing in it. I agree. That's what happened to me. I saw friends of mine become Bitcoin millionaires. I started asking them questions about it and how it works, and they had no idea how it worked. I said, how are you investing money in something you don't understand? They said, Bitcoin keeps going up. That's all I need to know. Well, even I knew it's not going to keep going up. So I did my own research and realized you make money when the market goes up and when the market goes down. So it says, they should also be willing to sustain the large losses which could stem from the volatility of the cryptocurrency. That's correct. Every single one of you in the crypto space, I can guarantee that you're going to lose some money somewhere along the way. I can guarantee that. If you're educated, you're going to earn far more money than you'll ever lose. But you will lose sometime around there, every now and then. So in light of the increased interest in cryptocurrencies among millennials in the UK and many other parts of the world, it will only be a matter of time for millennials in Africa to follow suit and allocate more of their investment capital to digital assets. All right, so let me go to the last article, and this actually doesn't have anything to do with crypto, but the state of the world economy, which crypto is the answer. Let me put this in the chat box. Okay, this is done by CNBC. What is the date on this? It came out today. No, that's just telling me the time today, 2:55 p.m. Yeah, it came out today. No, I'm sorry, September 20th it came out. All right. There's a global currency crisis unfolding that's sure to catch up to the U.S. I think I covered something similar like this the other day. A review of the values of 143 global currencies indicates that so far this year, more than 80% have fallen in value. You hear that? 80% of all fiat money. They want to talk about cryptos as volatile. 80% of all money in the world has fallen in value. Persistent rate increases in the United States may be having very negative impacts on the global economy. When well over 100 nations see the value of their currencies drop, it is highly unlikely that the United States can pursue its economic goals unaffected. If the currency of a nation declines meaningfully over a sustained period, it creates significant problems for that nation's economy. A review of the values of 143 global currencies indicates that so far this year, more than 80% have fallen in value. Another 11 appear to be pegged to the dollar, and 13 have risen in value. Of the 13 that have risen in value, only 6 are up more than 1% versus the dollar. There have been outsized declines in countries like Venezuela, down 99%, Argentina, 53%, Turkey, 38%. However, Brazil is down 20%, Russia, 15%, India, 11%, Sweden, 10%, and the Philippines, 8%. Big economies like China are experiencing a 5% currency value decline, while the euro is off by 3%. The reason for these declines would appear to be deferring monetary policies of the United States and most of the rest of the world. The United States is experiencing solid economic growth and some signs of inflation. This has led the Federal Reserve to raise interest rates 7 times in the past 22 months, and it has nurtured the expectation that there will be 5 more increases in the next 15 months. Other nations who are not experiencing solid growth are pursuing different deferring policies. Some are maintaining interest rates at low levels. There are nations like Germany and Switzerland that still have negative rates in some cases. Plus, many nations are unwilling to abandon quantitative easing policies. If the currency of a nation declines meaningfully over a sustained period, it creates significant problems for that nation's economy. Inflation increases. There is more pressure on interest rates to rise. Resources must be diverted from economic development and put into financial payments, much of which could be sent overseas. And it's going to be harder to pay debt. External debt are the funds of a nation, and its businesses and citizens owe to lenders outside the home country. Using sources like the World Bank, the IMF, and Wikipedia, one is able to develop a rough estimate of the external debt of 205 countries. If the estimates are correct, these countries owe $76.9 trillion in dollar terms. The biggest countries in Europe may have external debt of $40.6 trillion. That it will never be paid back. The US and Canada owe $21.4 trillion overseas. Asia has $11.1 trillion, with the remaining debt spread among countries across the globe who owe less than $25 billion apiece. A 1% increase in the cost of debt globally will result in a need to increase interest payments by $769 billion, a 2% increase, which is close to what has been the rise in the effective FE funds rate. If spread globally, would force nations to increase their payment by $1.5 trillion. The point here is that persistent rate increases in the United States may be having very negative impacts on the global economy. When well over 100 nations see the value of their currencies drop, it is highly unlikely that the United States can pursue its economic goals unaffected. In the mid-1980s, when the Fed in the United States created a similar problem, the largest nations came together at the Plaza Hotel in New York and forced a change in approach. One must start thinking about a similar conference if the current trends continue. They cannot be ignored. The poet John Donne wrote many decades ago that no man is an island. In a global economy, no nation is either. Well, that goes completely against what Donald Trump just said at the United Nations yesterday. You know, he flat out said, we don't believe in globalization. We believe in patriotism and isolation. And you guys are basically on your own while we take care of America first. Interesting. But our nations and worlds are combined. What happens to one country impacts the other, both good and bad. And before I log off, let's take a look at the current market right now. Where are we sitting today? Let's let this come up. And my computer's moving hella slow on me. Well, last time I looked at it, the market was kind of reversing, kind of flat, but moving in the upward direction, which isn't too bad. And that means that if you were looking to buy, that was the time to start to buy. Buy your coins, buy new coins, because it flatlined itself. All right, so we're back in the, whoa, look at this. I did not look at it this morning. We're back to $217 billion cap. Bitcoin is up 1. See, didn't I say it last night? Buy. Now look at this. Bitcoin up 1.8%. Ethereum 4.7. Ripple's up 17%. Bitcoin Cash 20%. Bitcoin Cash is skyrocketing. What the heck? EOS 9%. Stellar 5.9%. Litecoin 5%. Of course, Tether's in the red, as it should be. Everybody's pulling their money out of Tether and putting it back into the market. Cardano 7, Monero 2, Dash 4. This is healthy. 11% is Steam. 23% Electronium. 23%. You guys see that? Electronium is back to 1 cent. It was at half a cent last week. It's at a point or 1.4 cents. Keep rising, Electronium. Let's see what else. And now Electronium, what is number 52 on the market cap? 89% is Eternal Token. Okay. What the heck? To me, that looks like a pump and dump. I have not heard of Eternal Token to my memory. So, what's going on there? 89%. But let me look at MobileLink. I've been watching that closely lately. And I made the mistake. I was supposed to get $1,000 more, and I forgot to do it yesterday. And look, it's up 15 freaking percent. 15%. Had I did my 1,000 yesterday, I would have made almost 16% on my money overnight. Man, that's why I do crypto talk. I'm watching this stuff. I'm learning. All right. So watch the markets. I don't know how long this is going to keep going up. So if you want to buy right now, you can go ahead and do so. The good time to buy was last night when it was flatline. Now it's taken off like a rock. So I don't know if the market is going to correct. How high will they let it go before it turns around again a little bit? But keep an eye on the markets. Everything's moving. Bitcoin Cash is up 20%. Look at that skyrocket right there. I don't know what happened in their world. But all right, everybody, that's enough of Crypto Talk for this morning. In a couple of hours, I will be back to do live, and I'm debating should I do it on Facebook because I have the camera on, or on YouTube. But I'll do a live, and we're going to talk about where I left off with yesterday. The year is not yet over. You can still accomplish great things and meet your goals this year. Last year, the last quarter, the last 4 months of last year, I made over 6 figures. Just the last 4 months. So it doesn't matter where you currently are. You can change that all around. So with that, everybody, have a great day. I will see you in a couple of hours. And then I'll be doing late night crypto talk again tonight. But that time will probably be at 10 p.m. Eastern, because I think we're doing a Bridging the Gap call at 9 p.m. So at 10 p.m. Eastern is when I'll be doing the late night crypto talk, 7 p.m. Pacific. Have a great day, everybody. Bitcoin Brandon out. Bye-bye.